Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como and today is the 14th of May 2025. Today we have a special guest on the program. His name is Trent Klarenbach with Klarenbach Research. He specializes in technical analysis of ag and other markets. We're going to have him on in just a second here, but first let's run through what happened in markets today. Canola settled down $7.80 a ton at $721.50. Minneapolis wheat still kind of bucking the trend of the other wheat classes at this point, down $3.75 at $5.77. Kansas wheat up a healthy 11.25 to $5.23. Chicago wheat up 7.5 to $5.24 3/4. Soybeans up 5.25 to $10.77 3/4. Corn was up 3 at $4.45.5. The Canadian dollar is trading at 71.56 today. Live cattle took a bit of a breather today, down 237 to 209.38. Feeder cattle also took a breather, down 4 to 301.98. All right, without further ado, let us welcome Trent Klarenbach to our program. All right, welcome Trent to CanadianAgMarkets.com. How are you doing today?
Oh, I'm doing great, Brian. Things are looking good up here in Saskatoon, and the weather's great, and I'm excited to talk to you today. So.
Good. Have your clients given you an indication as to how far along they are seeding? Like, is it good progress that they're making?
I just talked to a buddy down in southern Saskatchewan. Of course, they're quite a bit ahead. He said a lot of his neighbors are done already. He's got, I think he told me, I don't know how large his farm is, but he's 1,000 acres left, but he's pretty much been a one-man show this spring. So I think a lot of guys are wrapping up. So
yeah. We have some clients on the eastern part of central Alberta, and some of them are done. You know, the ones that like to brag, he brings a sprayer out and just, just to rile everybody up. But I would say somewhere north of 50% done as a general rule, but still some to go.
Yeah. Well, it's pretty, what is it today? The 15th, 16th, 13th?
14th,
14th, okay.
It's still pretty early.
Pretty early. Like when growing up, my father, this is before wild oats, chemicals and that sort of thing, and seeding with diskers, it was the 15th of May was considered to be the optimum time back then. So it's still early.
Exactly. All right. For those who don't know you, Trent, I'll introduce you. I'm speaking with Trent Klarenbach today with Klarenbach Research. His website is klarenbach.ca. And Trent, you specialize in technical analysis of markets, predominantly grain markets. Feel free to correct me if I'm wrong on any of this stuff. But you do cover a plethora of other markets as well. How did you start in this business? What got you motivated to move into this space?
Well, it's a little bit of a long story here. I'll go back a little bit. I had some really strong influences on the grain marketing side from my neighbors, mainly Raymond Somerville. He opened up the interprovincial selling of grain between provincial borders. At one time, it was illegal to grow grain in Saskatchewan and sell it in Alberta without going through the wheat board. And then the other, about 1.5 miles away, was Reinhold Nunweller. He really kicked off the special crops industry in Western Canada, introduced canary seed to Saskatchewan, probably Western Canada, and formulated all-state grain with 2 partners. So I had a strong influence in grain marketing. And then when I was farming, I thought there were some opportunities with chickpeas and coriander, as I was an early adopter of those crops. So I kind of went about went down the exporting path a little bit, did a little bit of stuff, but that was somewhat difficult without a facility or experience or a mentor or all three, right? And so I pursued that for a bit, and then I farmed, and then when I left farming, I went into some other businesses, and then my son introduced me to technical analysis in about 2014, and he wanted to quit university and take a day trading course. So I helped him with that, and I thought it was just nonsense, lines on a chart. But I thought, well, let's just learn from our kids a little bit and take interest in what he's doing. And then I found some mentors that resonated with me on the internet, and they weren't the guys with yachts, speedboats and yachts and scantily clad women on the boats. They weren't those type of guys. They were more guys my age, and I wouldn't say I guess they're influencers, but not really. Anyways, they're still around in the industry. So I had to pick some good mentors there, and I started studying technical analysis and went hard on the cryptocurrency space 24/7, trying to learn as quickly as I could. The traditional market timeframes just weren't enough for my patience. And then I live in Kindersley and playing hockey in the Kindersley Farmer hockey team, and all my buddies are farmers, and I can still speak the language. And they're telling me about their challenges with the grain marketing and buying out contracts. And I thought, okay, there's a void to fill here. So I decided I would, fill that void, and started introducing technical analysis to some of the cash crops and the special crops, along with the traditional market. So everything from, you look at Chicago wheat, soybeans, canola, cash durum, red lentils, green lentils, canary seed, kabuli chickpeas, and just started applying technical analysis to that, and demonstrating how that works and how effective it can be. So.
Yeah. One of the things I'm always impressed with is the fact that you do technical analysis on commodities that are not exchange traded, right? So, and I would say you have a niche in the marketplace there. Nobody else that I know of is really doing that, and I think that adds a lot of value to farmers here in Western Canada, particularly on some of those commodities like durum and peas and lentils and things.
I hope so. That's my mission and my objective. And it's interesting how these markets, you don't have the volume. I mean, they're illiquid in comparison, right, to corn, soybeans, but humans are humans, and they're the common participant in all these markets, and our behaviors are the same whether we're tracking it on a chart or not. I think it's quite fascinating. So.
Mm-hmm. So your service, you send out newsletters and videos with explanation of your analysis. What does that look like for the clients that subscribe to you?
Well, I published 2 newsletters. One is the Klarenbach Grain Report, and that covers your grains and oil seeds. So right from canola to soybeans to hard red spring wheat, durum wheat. I look at that on the cash market in Western Canada, and also the exchange traded analysis. And this Klarenbach Special Crops Report is that. It's the special crops. It's the yellow peas, the green peas, the kabuli chickpeas, canary seed, lentils, and mustards. And what I do is, in both of those reports, there's some overlap, I feel, with diesel fuel and fertilizer and interest rates and currency. So I'll also give some guidance on that, and just just give some guidance in those asset classes also. So,
well, it's been a very interesting.
Sorry,
it's been a very interesting time for interest rates, currencies, and things like that in the last few months.
Yeah, it is fascinating, and every day there's another news release out that catches someone's attention. There's some sort of reaction to it, but despite all that, the Canadian dollar is trading. It's very technical, in my opinion. It's trading just kind of like as one expects it to. As is I look at the 5-year bond yields to get some indication of interest rates in Canada, and that's fairly technical. It's not giving us much insight at the moment, but nonetheless, it's fast. I think it's just an incredible time to be alive, actually, with all the action in the news and how we react to those news releases in those markets. So.
Yeah. Well, we'll ask you to get into some detail on some of those charts, but before we do, your new subscribers can find you at klarenbach.ca, and that's Klarenbach.
That's correct. Yes.
.ca, and they can find you on Twitter as well under Trent Klarenbach, and your YouTube channel at Klarenbach Research. We'll link all of those in the description here of this video, so that people can go check you out after. But yeah, is there a couple charts that you are looking at right now that you are finding interesting?
Yeah, what I'll do, I'll share my screen here with you Brian. And, you know, the first one, I think, the chart I want to show you first. Can you see it? It's canola.
Yep.
Okay, this is the canola weekly chart, and you know, it's again, you know, it's been quite volatile, I would say, and it's getting a lot of people's attention. A lot of this rally caught a lot of people off guard, and it's great to see, right? So, you know, and to me, it's finding some resistance right where I thought it would in that 733, 734 level. That's a technical level there. There's also some previous resistance there, but you know, I feel it's got some room to go higher, but I don't expect it to go in a straight line. So we have this resistance level, and often what happens is these breakout levels, I would say this is the breakout level here at 680, 690. And often they're retested. So I would not be shocked if we get a retest of that 690, 700 level. But I mean, it's I got two moving averages on here. So what I'll share with your listeners or viewers, if they're not familiar with technical analysis, there's two moving averages which are found on, I'll say most charts, and it's the 50 period, which is, this is the green line here, and this being a weekly chart, it's the 50-week moving average, and the purple one's a 200 period, which is the 200-week moving average. And you know, so you often see these lines on here, these moving averages on here, and it's a lot of people are looking at them. They often provide some response, a reaction of those levels, and you can see this 50-week moving average, how it certainly has, you know, been support, resistance, and now it's been acting as support a little bit through here. So it's interesting to see. That's the weekly chart. When we drill down to the daily chart, we can see we're quite extended from these moving averages. So often the price comes back down to these moving averages. So, but all in all, this chart is looking, I would say bullish. I think there's more room to go on canola, which makes me excited, makes a lot of our viewers excited too. So that's good to see. Do you have any questions about this chart, Brian?
No. So yeah, this area here, on the weekly was, there's some resistance there from back in July. It looks like, is that where you're tracking? And then or late July. So we could test those highs of last July on this weekly chart, in your opinion?
Yeah, I think so. So what happens, Brian, is the price and these moving averages will often converge on one another. Mm-hmm. And it obviously takes some time, right? You can see it took a long time for the price in the 200-week to get to, you know, to converge on one another. But right now we're seeing this 200-week moving average starting to decline. And we last crossed it as the price crossed above the 200-week moving average when it was advancing, and it crossed below it. We haven't had that retest yet. So if you take a look at this 200-week moving average, it's sitting right around that let's say 780 right now. Mm-hmm. We draw a line right across here. That's, you know, that's in this level here of previous. There's some supply here at this level, previous, right from 770 up to 800. So yeah, I think we can get a rally up there, maybe, you know, probably 760 first, right? But I have no doubt that this price and this moving average will converge on one another. It's just whether it's going to be through time, meaning the price goes sideways, the moving average comes down to it, or it rises up to the moving average, you know, through space, right? So, but right now, I mean, there's a little bit of resistance here, but I wouldn't say it's much at all. So
yeah,
I think we can break through it. So,
and one of the drivers, obviously, for canola has been, you know, tight supplies in Canada, but also, you know, the action on soybean oil has been helping it out as well. You've been watching soybean oil a little bit closely as well. Is that right?
Yeah, I think it's important to watch the oil complex. So there's two charts here, Brian. Hopefully they show up well on your screen here for the viewers. But the one on the left is soybean oil futures. It's the nearby weekly chart. And the one on the right here is canola futures. And I don't know, they look pretty similar to me.
Yeah.
and yeah. So I mean, to me, they look very similar to me. So I think, again, soybean oil, I think it's It's got another 8% left in it. But I want to show you something neat here, I think. I'll dirty up this chart a little bit. And again, as technical analysts, we can make a chart get pretty messy in a hurry, but we understand typically what it looks like. So this blue line here, though, as you see, this is the anchored volume weighted average price from the high back in April of 22. And that's where the price is at right now. It's testing that level. So what that means is that's the average price paid per contract of soybean oil dating back to May of 2022 or April 2022. So really, the average contract has been underwater for a long, long time, yet but now it's back to breaking even. So in my own experience, if I've been holding a bag and losing money and I get back to breaking even, it's usually a good idea to get back to close to zero and just be thankful I got back to break even or close to it and exit my position, or certainly reduce my position at that point in time. So often that's what happens here. So I would not be surprised if this week or even next week, maybe we get a little bump above it, but I wouldn't doubt we see a sell off down to 49.50, somewhere in there, just back to this previous breakout level. But that's a very important level to me, and that kind of coincides with what I had for a resistance level at canola at 733, 734. So it's interesting how these charts can be aligned when you look at them that way. So
yep, very interesting. Or do you look at the position of managed money, spec traders, and things like that in your technical analysis?
I do a little bit. I find that commitment of traders reports can give you an indication that something is going to happen. But it really, in my opinion, needs to be used with other tools to be really effective, because I don't think you can use it as a real timing mechanism or indicator. No. At least I haven't figured out how to do that properly. I'm not
delayed information anyway.
It's delayed information anyways, yeah. So yeah, you can get indications. So you can, if you apply some of the same technical analysis tools to the commitment of traders report chart, then you can get some indication of what's happening. But it's delayed information. It can prepare you for future movements, but I haven't figured out a way to really use it effectively. So. Mm-hmm. But others have. I just haven't. So
very cool. Yeah. So does one of these look like they're driving the other? Like is soybean oil the anchor that's pulling up on canola, or do you feel it's the tightness in canola that's helping pull up soybean oil?
Yeah, that's a good question. I haven't put much thought into that. I tend to default to the volumes on those levels. I tend to think that the larger volume traded asset will drive the other, but I haven't really thought about what's driving one or the other. So not the best one for that. Don't have a very, very good answer for that question. So.
No worries. Well, here, maybe you'll have a good take on, Canada, us Canadians, we've been looking at spring wheat and thinking, that maybe we staved off some of the big weakness in the other wheat categories, but this week spring wheat seems to have decided to make new lows. What does that tell you?
Well, I mean, this is a horrible looking chart in my opinion, but the only saving grace and the only maybe positive it has for it, I shouldn't say that. There's some reasons to be optimistic, but the price isn't showing that, in my opinion. So a little bit of stage analysis here, which I think everybody should have an understanding of. And there's about 4 stages in the market structure. So if you have like a stage, this looks like a stage 1 accumulation to me. And just to give you an idea what that looks like, it might look very similar to this base being formed back here in 2019, 2000, and 20. This price is moving sideways. There's no real strong indication of the trend. And once it broke out, it entered into a stage 2 markup. I have trouble with the bar charts here. Stage 2 markup, and then trends come to an end, and we ended up into a stage 3 distribution, and then a stage 4 decline. But it almost looks like we could be in a stage 1 accumulation right here. So I keep sticking the fork in wheat to see if it's ready or not, or if it's done. But I really need some lower lows and sustained lows under 560 before I'm really to consider it done and finished. Again, this 200-week moving average hasn't been retested yet, so but it looks nasty. I don't really have any guidance right now other than to be extra cautious and be ready to protect your downside if we get sustained movement below 560. Mm-hmm. It doesn't look good at all to me, but there is some. If you put on your rose-colored glasses and want to be optimistic, there's some. Just be aware this could be a stage 1 accumulation.
So, looking when you kind of pulled back on that chart, it did show, 2022, which obviously was a bit of an anomaly year because of the conflict in the Ukraine and Russia. If this is a stage 1 accumulation, where would be some reasonable areas where it could, move to during this season, this crop year?
Yeah, well, I'd probably get it more. I have to get drawn some technicals on here. I'm kind of struggling with the chart here right now, but I mean, if we can make a new high above 630, get above 660, then, I think we have to consider $7. We have to start looking at 750, 760. We just keep moving up on our support and resistance levels. There's some technical tools that I talk about a little bit, but I think you start looking at support and resistance levels, and that's maybe where you set your next levels of interest or targets if you want to put prices in. So,
yeah.
But we need to show some positive. We need to get above 630. We need to get above 660, but right now we're trading at 577, and but I mean, looks similar to here. If you close one eye and put on some rose-colored glasses, it could be a stage 1 accumulation. So.
Mm-hmm. Obviously, spring wheat doesn't exist in a vacuum on its own. The winter wheat classes have a big pull on it. What does it look like for winter wheat for you?
You want to look at Chicago wheat?
Sure.
Okay, the big kahuna. So this here, yeah, we just had this could be a shakeout this week. We look at this week's candle forming, and there's a long wick on the bottom. Mm-hmm. We broke below. I've been eyeing up this 525 level. That was a very important level to me. That if we got a close below there, I would really start to become bearish. Last week we did. I like to get a full candle close below these levels. So that means the full candle body is below above a resistance level or below a support level.
Yep.
We haven't got that yet. We might get it this week here, but this is an interesting candlestick to me. It looks like there's been some. We're back to where it opened the week at, so that might be a positive thing. I've been waiting for a rally in wheat though, back in the fall, and we haven't got it yet. So, I keep thinking we're going to get back up to these levels, but I like to say I'm early, but I mean, if you're early, you're still wrong, right? So maybe I'm wrong, but we haven't got it yet.
Wheat has not been acting in a seasonal norm this year. The weakness seems unseasonable. So yeah, we may just be really early.
Yeah, that's one way to look at it.
Yeah,
or wrong, completely wrong.
Or but wrong. But we're not wrong. Yeah.
No, that's right. I have a descending triangle here, and it's one of my favorite tools to use is a descending triangle, but we've only had 3 tests of this upper trend line. So and just the only challenge is the closer it gets to the apex. So what happens is you expect it to break through this level of this bottom trend line, this level of support. It hasn't
done so convincingly.
Done that really, I don't think, conclusively, but we haven't had this upper trend line yet. You typically have 3 tests of it, but then but the nice thing about it is, Brian, the closer you get to this apex of this triangle,
Mm-hmm.
the odds of it going down, the ascending triangle being confirmed, is it gets weakened, right? So the closer you get to the apex here, the more likely it's going to go higher than it is to go lower. So that's, I mean, keep sticking our fork in it, see if it's done, but it's not quite over yet, but it might be getting close, you know. So
yeah. A couple of other things I wanted to ask you about was, some of the macroeconomic things, the Canadian dollar and, some interest rate talk. I know you have a lot of experience and passion around those 2 things. Is there anything you have to share there?
Well, the Canadian dollar, I keep hearing about this Canadian peso thing, and I'm too much of a nationalist, I guess, to buy into that stuff. But nonetheless, interestingly enough, I got a buddy in the industry. He's been in trading currencies for over 20 years, and there's only been a handful of times in his career when the currency has been trading, around that 68-cent level. And you see, we found buyers, I guess you would say, here in 2020, and again here in January. So we had that, I think it was a Trump announcement there, and had the sell off right down to this previous support level. So I mean, ever since then, we got a reaction. The price is trading. The CAD is stronger now than it was pre-Trump, right? So I don't think this is, I don't know, I'm a bit of a nationalist. I got to be wary of my bias, but this being the weekly chart, we're testing this upper trend line again. I mean, we're right at that 50-week moving average. It looks like it's going to start flattening out here, maybe in the next month here. Maybe our dollar strengthens, but I don't. The idea that it's going lower straight down, I don't think it's highly unlikely. There's a lot of supply here to work through. I don't think it's going to happen overnight. That's going to break out higher. But
yeah,
I was interviewed a few months ago, and this might be back in February or March, and my idea was that CAD will trade between 70 and 72 dollars or cents in the second quarter, and it looks like it's kind of doing that right now. I think it was trading around here. I think, February or March, and I had that idea. But I mean, there's overhead resistance here. This previous support act as resistance often, and I think that's what we're seeing right now. So,
well, a lot of the currency direction in the last little while has been related to, general market optimism about the U.S. economy, and just, I guess, in general, how safe the U.S. is for a place to invest in. And, bond yields could have, are being touted to some as, one of the reasons why Trump has been, maybe more eager to get trade deals done, and to maybe capitulate a little bit on some of the harsher tones he's been using recently with the rest of the world. What do you see in bond yields today?
Well, I can look at the U.S. 5-year yields right now, and you can look at the 5, maybe the 10 years even better. But I'll look at the 5-year Canadian. I'll still stick with the 5-year bond yields. So, you actually, I'm not sure what to say with bonds right now. I mean, this is a weekly chart. We're above the 200-week moving average. We're above the 50-week. I'd say the longer-term trend is still higher. So the bond yields, as they go up, the price of the bonds go down. But this is the bond, 5 and 10 year would be where your mortgages are calculated at. So a higher yield means higher interest rates. And there was some discussion, and I don't have the access to the knowledge for sure, but there was certainly some news that some of the U.S. trading partners either threatened or sold off some bonds in order to keep the bond yields high. And the bond market's so much larger than the stock market, and it's really it's a big stick, and I don't know, it's a lot of significance. But I'll just look at the 5-year Canadian. Do you have any questions on the US one before I leave here, Brian? Or
No.
okay, yeah, I don't know. The chart to me doesn't really. I've been waiting to publish an interest rate article here for months now, and I just kind of keeps moving sideways. There's not really a whole lot to. We're not getting a clear definition of the direction of the trend, in my opinion. So, other than the longer term trend is higher. This is the 5-year here, Canadian. So they actually, if you notice that, let's just go back here. I'll compare the two. So if you go back to the US 5-year, for example, the 5-year bond yields are above this 200-week moving average, and they're actually trading at right now today, this week, above the 50-week moving average. When we go down to Canadian, our bond yields are actually trading below both those moving averages. So that could be a sign that our economy is going to be weaker and interest rates will need to decline. But we haven't got that confirmed breakdown in the bond yields yet to confirm that. So I'm not getting a clear direction where the bond yields are going, but I think we really need to keep an eye on these in order, when you're purchasing equipment, refinancing loans, I think it's important to have a good idea of where those bond yields are going. Right now, it's not real conclusive where they're going, but I want to highlight the idea why a lot of people focus on the Bank of Canada prime rate, and that's important, but I think more emphasis should be on the 5 and 10-year bond yields, in my opinion. So,
yeah, the Bank of Canada just publishes an overnight rate, whereas the 5-year gives a little bit more. You're right; it does make a difference on longer term lending, mortgages, land, things like that. So, yeah. I agree with you. Yeah. Beautiful. Well, thank you so much today for sharing your insight. We really appreciate it. Again, our listeners or viewers can find you at klarenbach.ca, and we hope that you go check that out. We'll also put as I said, your Twitter and website information and everything in the description below, and so our viewers can see you there.
Well, that's great. I appreciate it, Brian. And yeah, I enjoy talking the markets. I just enjoy the interaction, and if anybody wants to reach out, they can certainly do that, and give you some ideas to consider anyway. So
sounds good. Yeah, life's sometimes lonely for us analysts because we just lock ourselves in closets and look at screens all day. So this is great. Thank you so much.
Yeah, that's exactly what happens. Okay, thanks, Brian.
You bet.